Well, it looks like tariffs and bank failures are going to be the new normal in 2025 because both of these things are happening right now. The tariffs for China, Mexico, and Canada just went into effect, and also there are a bunch of banks that are on the verge of financial insolvency right now, and there's a lot of other things in terms of the economy that we need to discuss today. So the first thing is the tariffs. That's the big news, right? So as of Tuesday at midnight, the tariffs for China, Canada, and Mexico went into effect. It's a 25% tariff on almost everything imported from Canada and Mexico, and it's an additional 10% tariff on top of the tariffs that we already have on China. Now, just from these three countries alone, they account for about 40% of total US imports as of 2024, and they're also the top three US export markets. So that's why these countries are being targeted, because they are our biggest trading partners. And of course, these countries are retaliating. China says that they're going to be imposing 15% tariffs on US imports, and Canada and Mexico are going to be retaliating with the same 25% tariff on US imports, which really all these tariffs do is they just tax their citizens more. So everybody in all three of these countries is going to be paying more for everything. In China, they import a lot of their chicken, their wheat, and their corn, pork, beef, fruits and vegetables here from the US. So they're going to be seeing those items 15% more expensive pretty much overnight. In fact, we're going to be seeing the same thing happen here because both the CEO of Target and Best Buy recently spoke out on the new tariffs. And the CEO of Target said that fruits and vegetables are going to be going up in price as soon as this week in all Target stores across the country because they rely heavily on importing those items from Mexico. But really, you could say any grocery store is going to be seeing that increase on all imported Mexican fruits. It's not just going to be Target, it's just the Target CEO is the one who spoke out about it. Target CEO, he says that we're trying to protect prices, but the consumer will likely see price increases over the next couple of days. I mean, as far as I'm concerned, this guy should probably keep his mouth shut because Target's already been in trouble for a lot of different things over the past couple of years with the trans clothing and then the DEI measures, different things like that. A lot of people are already boycotting Target, so just coming out and saying that groceries are going to be more expensive there probably isn't helping their business, I would imagine. He also said that the tariff uncertainty is going to impact Target's profit margin. Best Buy, their CEO, came out and said that consumers are going to see higher prices for a lot of items in their stores because China and Mexico are the top sources for consumer electronics at Best Buy. But one big unknown, which is something I've mentioned here before when I've referenced this, is nobody really knows as of yet just how much these tariffs are going to impact prices. Like, are they going to go up by the full 25% or the full 10%? We don't know, because some manufacturers and some companies and some stores might even decide to eat a small portion of that tariff to kind of ease the blow. Because at the end of the day, nobody wants to see their sales go down, right? But it's going to be inevitable if prices go up enough. And a lot of people in the housing industry are already worried about what the tariffs are going to do to home prices and affordability. And I have an interesting take on this. First of all, homes are already unaffordable, so that's really nothing new. So if the tariffs make homes even more unaffordable, that could actually end up being a good thing, and I'll explain why in just a minute. But first, let's look into the reason why tariffs might make homes more expensive. It mainly just boils down to construction and repair costs. About 60% of all of the hardware that is needed to build a house is imported from China, Canada, and Mexico. So 60% of the cost of building a home is subject to an increase now. Apparently, we also import about 75% of our lumber that comes from Canada, and we actually import more household appliances from Mexico than China when you measure it in dollar amount. And of course, this translates over into higher homeowners insurance costs as well, because the insurance companies will charge you based on their repair costs, and if their repair costs go up because of the tariffs, then naturally your homeowners insurance premiums are going to go up as well. Another thing that people in the home building space are also concerned about is that the higher cost of building materials also increases the severe labor shortage going on in the construction industry. And they say that many home builders won't be able to swallow all of the additional costs, and at some point consumers won't be able to afford to buy. Well, newsflash, we're already there. We're already in the situation where consumers can't afford to buy. I don't know where these people have been, but that's been the situation for quite some time now, and that's reflected in how desperate the home builders are right now, how many discounts they have to give, all of the concessions, all of the mortgage rate buy downs, and their share prices falling. And of course, you also have the issue of the deportations that are happening simultaneously, increasing the labor shortage when it comes to building homes. But here's the thing, guys. We're already in a situation where people can't afford to buy, right? The home builders are already struggling. And one thing that one of my regular viewers, Steve, writes me from time to time, which I think is a great example and a good financial concept that applies in this situation, is that the cure for higher prices is higher prices, right? So everybody wants the price of homes to come down, which they are starting to come down in many areas. And especially when it comes to brand new homes, builders are having to start to discount these properties to get them sold. And so if they raise the prices even more and decrease their sales even more and decrease their customer base even more, then inevitably that's going to lead to a situation where they're going to have to lower prices even further in order to bring people back in to buy. Because just like all these houses we see here on my walks, sellers can charge whatever they want for the house. But if no one's buying, it doesn't really matter. The price is not realistic. And so that property just sits on the market until the price becomes realistic. And so at least when it comes to housing, it might not be such a bad thing if the tariffs actually increase the price of homes temporarily, because they're already so unaffordable. That will just increase inventory even further and put the market in a more favorable position for buyers even more. Like, we're already pretty much in a buyer's market right now, not technically when it comes to the level of inventory nationwide, but in many areas across the country, we're experiencing a buyer's market. And in terms of how low buyer demand is right now, combined with seller desperation, it is a buyer's market. Buyers have more negotiating power than they have had in the last 5 years, guys. So this is actually not a bad time to be a buyer, at least in terms of that. And I expect that the tariffs are going to make that situation even better for buyers, even when it comes to insurance, guys, right? Nobody wants to pay higher insurance for a house. But if everybody has to pay higher insurance for a house, guess what that just did? It made buying a house become more unaffordable, which means buyers are going to have to see a lower price in order to be able to buy any given home on the market. If more of their monthly payment is going towards insurance that's required if you have a mortgage, it's less money they have in order to actually spend purchasing the home. Makes perfect sense. But in terms of other things like having fruits and vegetables and other items that you need to buy, electronics, whatever, being more expensive, that's not necessarily going to be great for the economy. In fact, a lot of economists are saying that this is going to plunge us into a recession. I've been telling you that we're already in a recession. We have been for a while. This whole situation is just going to highlight the recession that we've already been in. But before we talk about the recession and how much these tariffs are going to impact the recession that we're already in, let's first touch on the potential bank failures that we could be looking at. Because right now, there are 66 US banks that are on what they're calling a problem list, okay? And these 66 banks have a combined $118 billion in unrealized losses just in the last 3 months. So that is a huge problem, guys, because what we saw a couple years ago is we saw 3 major banks fail just 2 years ago, pretty much to date, in March of 2023. That's when we had the Silicon Valley Bank failure. That $118 billion was just an increase in the amount of unrealized losses, which now brings the total of unrealized losses on securities to about $482 billion, guys. This is a disaster. The FDIC says that the spikes in long-term interest rates, like the 30-year mortgage and 10-year treasury rates, lowered the value of bank securities, triggering the increase in unrealized losses. Well, why is that happening again? Oh, right, because inflation actually hasn't been resolved, like they keep telling us it has. Oh, we actually have one that's selling for a change. Check this out. This house was sold back in November of 2022 for $1.159 million. And then they listed it for sale back in October last year for $1.83 million. And since lowered the price a little bit down to $1.79 million, and they got it under contract. And that's how you sell a house. Okay, look, the asking price was not exorbitant compared to what they paid a couple years ago. Was it more? Yes. Are they going to turn a profit? Yes. But it's not like they were going from 1.15 million to 3 million like you see a lot of these houses do. They're at 1.79, and I'd be willing to bet that the amount that they're actually selling the house for is less than that. But even then, you see, even having that house price relatively within range, it's still taking quite a long time to get the house sold, guys. I mean, they listed it in November, basically, of last year, and it went pending only at the end of January. So it still took a good 2.5 months to get that house under contract and a price reduction. And that's best case scenario, right? So the real estate agent there is doing a good job. The seller is also being realistic on getting that house sold. That's what everybody has to do these days if they want any chance at selling. Anyways, the unrealized losses are the difference between the price banks paid for securities and the current market value of those assets. In other words, the rising long-term interest rates are crushing the value of those securities, which is making this banking crisis happen right now. And that's exactly how Silicon Valley Bank failed, because they had a lot of these unrealized losses on their balance sheet as well, and they had to sell a bunch of these securities at a major loss. And so once their depositors got wind of that, they started pulling all the money out of the bank, and then the bank failed. Now, so far since the beginning of this year, there actually has been one bank failure. We saw Pulaski Savings Bank actually get shut down in January due to suspected fraud. But with 66 other banks on this problem list and seeing some unrealized losses right now, there is a high probability that we are going to see more bank failures in 2025. So get ready for that, guys. Like I said at the beginning, tariffs and bank failures are going to be the norm this year. Now let's go back to the recession, because the Atlanta Fed, they just put out their first quarter of 2025 GDP estimate, and originally it was negative 1.5%. So already a bad reading, right? And that was just about a week ago. Well, guess what? They just revised that down even further to negative 2.8% as of March 3rd, guys. Take a look at this chart here that just shows you how much this GDP estimate just dropped through the floor over the past couple of weeks. I mean, this is not a coincidence. The tariff situation, combined with how bad the economy already was before this, it's not really a surprise that we are going to see GDP dip substantially. And that's why all these economists now are saying, well, these tariffs are going to push the US economy into a recession. Okay, they're saying things like this. The simulations have been done on the full tariffs against China, Canada, and Mexico, and if that happens, we will be in a recession within 9 to 12 months. That's what chief economist of Northern Trust, Carl Tenenbaum, said recently. But here's the thing, we are already in a recession, right? All these things that are happening are just highlighting the recession that we've already been in. It's bringing forward the fact that, wow, things haven't been good for a while, and these tariffs and everything else that's happening, these potential bank failures, the lower GDP estimates, the consumer debt going up, these are all just confirmation of the recession that we've already been in. These are problems that we've been having for a while now. The tariffs is the only thing new here. So by saying that we'll be in a recession within 9 to 12 months, what I believe that actually means is that people who thought we were not in a recession will finally realize that we are within the next 9 to 12 months. That's what I think that really means. Because it's been obvious to people like me and a lot of people like you who watch my channel for quite some time, but there's been a lot of left people in denial and have been, looking at the stock market and their real estate values like these guys are crazy, there's no recession, unemployment is still low, you don't know what you're talking about. Yeah, well, guess what? Home prices are dipping. Stock market just had their worst day as of 2025 recently, and that doesn't look like it's going to be getting any better anytime soon. Who knows? But with the stock market, you never know, because it seems like bad news is always good news over the last few years. Maybe reality is finally starting to set in for investors too. But here's how the tariffs is going to affect the broader economy, is what a lot of economists are saying. And a lot of this I actually agree with. The first thing they say is there's going to be a hiring freeze pretty much everywhere as companies try to figure out what is going on and how it's going to impact their business. Manufacturers are going to have to reorganize their production, which they can't do in a day or a week. Also true. And so slower hiring will lead to less consumer spending, which is the main engine of economic growth, because we don't make anything here. We don't actually do anything in this country besides consume and spend money. So the moment that goes away, then our economy is in big trouble. And that's exactly where we're headed right now. And they're saying, look, the damage to the supply side of the economy is especially harmful because that is the secret sauce that allowed the U.S. economy to continue to grow over the past 2 years, even without inflation coming down. So as a result, the pandemic companies were forced to examine how they did business, and many of them made improvements, including a stronger supply of goods from overseas, and the labor supply also increased. So it was those factors combined that gave the U.S. economy a boost that you didn't really see in other parts of the world. The immediate effect of these tariffs is that it's going to slow down growth, and it's also going to push up inflation, and we're going to likely be in a situation of stagflation. And the last time we saw stagflation was in the 1970s, but it's basically when you have high inflation and low economic growth, because usually it's the opposite. Usually you have high inflation combined with high economic growth. And guess what? The Fed doesn't have any way to battle this situation. Even Jerome Powell himself, when asked what his plan is when it comes to dealing with stagflation, is just hope that it doesn't happen. That's literally the plan to how to deal with this, guys, because they can't do anything. When inflation is high, lowering interest rates is just going to make inflation worse, right? It might stimulate the economy, but at what expense? Extremely high inflation, right? If they increase interest rates when rates are already supposedly high, according to most people, even though it's just historically normal, then that's just going to push us further into economic decline. So they really can't do anything. Their hands are tied in a stagflation scenario. Some economists are being realistic because some people already think that the economy has already stalled as uncertainty has been growing since the election. But the reality is the economy was already stalled before that, and the election just kind of pushed it into overdrive as far as I'm concerned. Another economist is forecasting that we're only going to see 30,000 jobs created in the month of February, which of course would be abysmal. And it's for the same reason. It's because nervous companies that are worried about what's going to happen in the immediate near term are not hiring people. You know what's interesting? It's pretty much all of these economists who are the ones that were saying that there's no recession, there's not going to be a recession because everything is holding up just fine. Well, to me, this tariff situation is just highlighting how weak the economy actually was all along. If all it takes are these tariffs to push us into a huge recession, guys, then things were never good or strong to begin with. That's my argument with this. Because if things were good, Americans would easily be able to absorb the tariffs and continue on with their daily lives like it's no big deal. But that's not going to be the situation most likely, as most people are already strapped and, stretched to the max when it comes to their financials. So these tariffs are likely going to have a major impact on people's budgets and a major impact on how many people can afford to pay the bills or not. They're saying that also farmers are going to be hit because of the tariffs that China is imposing. They're thinking that China is not going to be importing as many American food items anymore, but all that's speculation. We don't know if the imports and exports are going to continue at the same rate and people are just going to fork over the extra cash, or certain companies are going to, absorb part of the difference. We just don't know how it's going to play out yet. But what we do know is the tariffs are here, and they are going to start permeating throughout the economy shortly. There's also likely to be a negative wealth effect from the tariffs, because here's the thing. Now that the stock market is actually being impacted and is actually starting to go down in a meaningful way, and people have already been losing value on their homes. Do you think that's going to instill confidence for people to continue spending in this economy? Probably not, because one of the main reasons that people were spending is because of the wealth effect. They saw their portfolio balances high. They saw the value of their home continue to go up year over year. If that no longer continues to happen, then people lose confidence to do that. And then people start hunkering down. They start spending less. And when people start spending less, there are more businesses that close. There are more job losses, and it just has that negative spiral downward. So what we really have to see moving forward is how consumers are going to respond to this situation. And the response is largely going to depend on the businesses and how they respond to it, right? And it's important to think and remember that seeing the stock market go down is kind of like a premonition. When we see the values in the stock market go down, this is an indicator of where traders think the direction of the market is going, where they think the corporate profits are going. So now that we're seeing stock values start to decline, this could finally be the beginning of the bear market. Another thing that we saw due to all of the economic turmoil recently is how the US dollar declined to a 3-month low against a basket of major currencies. A lot of traders sold the dollar due to fears of how the tariffs are going to impact American companies and anticipating that a weakening economy will lead the Federal Reserve to lower interest rates later in the year. Well, like we just talked about earlier, if we're in a stagflation scenario, which it looks like we are, they might not be able to do that. Because if they do, we're going to have, hyperinflation. Also, the declines in interest rates caused domestic and foreign investors to sell U.S. treasuries and use those dollars to buy other assets, including other currencies. So this is all bad news. The only good news out of all of this is that anybody who's been kind of waiting on the sidelines for this recession to finally show its face and, have most people realize that we're finally in it, well, it looks like we're here. So as far as I'm concerned, this is just the beginning, guys. Like, you see the amount of economic news I've been putting out on this channel lately. It is just mind-boggling, the amount of things that are happening right now, and all of it is pointing in the direction of things going down. And I don't know how long it's going to take for everybody to wake up and finally realize that that's what's going on, but it looks like we're getting closer and closer to that day every single day. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.